everybody. Welcome to TraderMerlin Show for your short week. Happy belated Martin Luther King Day. I meant to put a nice post. Every Martin Luther King Day, I listen to a few of his speeches. It's always powerful and motivating and makes you think to do the right thing. So we are here on a Tuesday. An interesting one. We talked about the financial earnings that came out last Friday, and almost everybody in the financial space was beating earnings. And today, lo and behold, we didn't have that happen. So that will be the focus of today's show. Is going to be talking about some of the bad stuff that's going on in that space, and particularly with this chart right here. It says R.I.P. Goldman Sachs, 1869 to 2023. Now, don't worry, Goldman Sachs isn't dead by any means. They are the juggernaut out there, or one of the juggernauts in the financial space. But today's earnings, I guess, cast a pretty ugly light on what's going on with Goldman Sachs and the investment banking world. So I thought, you know what, let's start there, have a little bit of fun with Goldman Sachs today, and see if we might be able to find some investment opportunities. When I look at the charts, I actually think there could be some huge investment opportunities for Goldman Sachs. So let's start there. Obviously, I'm going to start with getting the basics out of the way. We'll talk about Goldman Sachs, kind of what their role is. Then we will look at a bunch of the competition so you can see where the opportunity may lie. There are some absolute stars in this space. Yeah, there ain't no sunshine when Goldman's gone. But there might be some darlings out there, and I think there's actually some great shorting opportunities potential in the financial services sector. So let's start there. Later on, we'll get into what happened in our markets today. For those of you who might be rather new to trading, Goldman Sachs, for as long as I can remember, was the proverbial 900-pound gorilla that nobody wanted to mess with, right? I heard stories from people who are on the floor of the Chicago Mercantile Exchange, and you guys may know what that looks like. Let me bring up a picture right here. Let's go CME floor. Just so you can see a picture of it. Makes it fun to check out what really happened back in the day. So you guys may know that a lot of these traders had little identifying badges, right, on their chest, and that would be like, you know, they work for this firm or Payne Weber or Goldman Sachs or Morgan Stanley. They would have different tags just to see, kind of represent who they worked for. And I talked to a guy years ago at the Trading Expo, and he was on a floor looked similar to this. I mean, look at this, just chaos, right? And everybody's jacket has a specific role and color. Yeah, I know it's a CNBC picture, but I just took it from the web. Everybody's jacket has a specific role that they're supposed to do on the floor. And this guy I was talking to, he goes, you know, it's funny how you have power struggles in that pit. Like, well, what do you mean? Tell me, what are you talking about? And he says, listen, I would be sitting in the pit and trying to sell some contracts and, you know, selling this, selling that. And Goldman Sachs would come in the pit and be like, listen, nobody's selling right now. If you sell, I will never trade with you again. We clear? And he would just start unloading. And everybody, he said, I would just stand there quiet, like jaw drop, because you can't go against the guy, right? They were so powerful that if you did anything to piss them off in that pit, good luck trading in that pit. You know, they could pretty much get you out of there. So I thought that was a funny story, and I'm sure there's some truth to it. I don't know if it's 100% true, but when they're that big, and Goldman Sachs was clearly the leader, they have power, they have sway. Yeah, where is he? Well, you know, he never actually traded on the floor. He was back here on one of these little shelves taking orders. He didn't actually trade on the floor. He was an order taker, kind of like the New York Yankees. It's kind of like, you know, it's funny. He always says, oh, I trade on the floor of the Chicago Mercantile Exchange. And again, that's like saying that you were the bat, that you played for the New York Yankees when you were literally the bat boy. You ran on the field if you were lucky just to touch the bat and run away. You know, someone got you on. Anyway, he's not in there now. So what does this mean? What is it? Why am I emphasizing this? Well, Goldman Sachs also has so much power. If you look at pretty much any central bank around the world, almost any government entity around the world, there are former Goldman Sachs connected in all of them. I mean, you just name a government around the world, somebody that used to work at Goldman Sachs now works for that government agency. So there was a joke that Goldman Sachs was actually called Government Sachs. So for the longest time, they were the king, and they still are, you know, proverbial giant in this space. However, BlackRock has since taken over a lot of their business, and a lot of people think that BlackRock is now the number one investment banking financial firm out there. Is it true? Let's take a look. So let me start things off just by looking at, I love the graphic. I had some fun with this one. Chart in the background, you got Goldman Sachs on a tombstone. I should have put question marks after the 2023. I'm just going to say this loud and clear. They are not dead. Goldman Sachs is not dead and going away. However, they might be for the short term. So let's real quickly go and look at their earnings assessments and what came out today. So these are from Yahoo Finance. If you go to Yahoo Finance and click on statistics, you can see the little consensus EPS numbers. And what this is showing you is going quarter over quarter, right? So this is basically looking at 1 year worth of earnings growth or earnings expectations, if you will, and results for Goldman Sachs. And you can see a very clear picture. Notice the blue, the white circles with the blue outline. Those are consensus. That's kind of asking a bunch of the analysts, what do you expect to happen here? And they are clearly pointed in one direction. All right, that is an absolute downtrend. I don't think anybody could argue that. You've got lower lows, lower highs. The trend is clearly lower. The colored dots show you where the actual earnings were. So the white and blue are expected. And then the colored dots, like the red and green, are actually where it took place. So the good news for most is that Goldman Sachs for the past 3 quarters, right, Q1 of 22, Q2 of 22, and Q3 of 22, they beat earnings. They beat expectations, if you will. However, still trending down and lowering those expectations. So what was interesting is this Q4 number, which was reported today, was expected to be $5.50 per share. That was what the industry expected. Now, if you look at the last 3 quarters, you would assume that they probably would have come out a little bit higher than that, right? Maybe they come out at 6. You're expecting 550, maybe come out at 6. Just a slight bump like you've seen the past 3 times. Well, look at the top of your screen right now and see what happens. Here is the earnings dot for Goldman Sachs. Boom. 330 is what they came out with. It's the biggest earnings drop in a decade. They dropped 69% on their profit for Q4, just absolutely getting crushed. Now, is it the end of the world? No. They cited a lot of investment banking deals. So for the longest time, Goldman Sachs has been kind of the leader in investment banking. You want to bring a company public, do some IPOs, hey, Goldman Sachs is there for you. However, I think that maybe some of the business was taken away from Goldman Sachs because of SPACs, specialty purpose acquisition companies. I think may have taken a little bit away from Goldman Sachs's party. Now, if you've been following the earnings announcements for these banks, you'll know that one of the reasons that I was long financial, I still am long financials. I have to reassess here given what happened with Goldman. One of the reasons I've been long financials, XLF in particular, is because with rising rates, the margins, the interest margins are much better for banks. And if you look at every single bank that reported, one of their saving graces this quarter was net interest on income. So basically they were making more money with the money they had, lending it out, higher yields. So that is a pretty good one, right? That's really kind of important. Let's see. So I mentioned that they were the lowest, the sharpest profit decline in a decade. It's the 5th straight quarter that they will have missed on their earnings. Pretty bad. So while we look at that, I guess it's standalone data when we just say Goldman Sachs looks like crap right now, right? Earnings are just falling off a cliff. Their investment banking side is in shambles. Their trading side is doing very, very poorly as well. So not really good at surface level. Now, let me ask you guys this. If you look at this chart right here, this table, if you will, of the consensus EPS and actual earnings results for Goldman Sachs, what do you think the price of Goldman Sachs has been doing? Big M says both Goldman Sachs and BlackRock offer a dividend about 2.6% and market cap are similar. Big difference in PE. Yep. We can look at that too in just a second. But what would you expect the price chart of Goldman Sachs to look at? This is where it gets really interesting for me because either I'm missing something or Goldman Sachs is poised for a pretty big move. So I'll wait for you guys to type in the chat there what you think maybe Goldman Sachs chart should look like. And I think it's pretty safe to say that when you have consensus earnings are declining like this, literally this is representing 1 full year, that we should have seen this dropping much lower, right? I would have expected to see their price really tanking. Well, let me bring up the Goldman Sachs chart for you. Okay, so what you have on the screen here, let's do the past 5 earnings quarter. This goes all the way back into, let's see, that was Q4 of 2021. So there you go. There you have the chart with all of those earnings announcements that you see on the screen. Literally from the hard red edge or hard left side, that's the where they missed by 95 cents in Q4 of 2021. They've actually been going up. You know, so to me, I have to look at this and go, okay, what the hell's going on here? If Goldman is having the worst quarter that they've had in over a decade, and if you look at this one again, look at the peak up there. Their earnings back in Q4 of 2021 was roughly $11, and now they're at $3.30. So if I look at this chart again, vertical line for where they came out with earnings, and they had $11 per earnings Price was, let's take these lines and move them around. Price was right here. So back, they were actually at $315 when they were making $11 per share. And here we are in the dotted blue line today, up at $349, and they're making $330 per share. They're making less than a third of what they were before. So in my opinion, like what should happen here, right? I think you guys would all agree that if they're making 33% less, and it's actually, I think it's lower than that. It's probably close to 28%, 28% of, let's see, that 72% less earnings, then this price should be 72% lower. I mean, Goldman Sachs should be trading at like $100 based off that earnings chart table I just showed you there. So I'm looking at this one going, okay, something I'm missing here. And it's still holding strong. And maybe that's their political connections, have intangible value there. Or maybe there is some good potential short opportunity here. Because if Goldman Sachs continues to have competitors eat its lunch, they're going to keep sliding here. Obviously, today was bad, down 6.44%. But notice right here, at $340, there's that level that's been bouncing off for the past, it's going all the way back in November of last year. We kind of based there in December, rallied out of it, and came screaming back into it. I'm looking at that break below 340 on Goldman Sachs as a potential short. And that could be a really good short based off these earnings. These earnings look atrociously bad, and I'll show you some more negative stuff here for just a second. Now, before I dive into all that stuff, yeah, I think you're right, Jay. And I'm not a huge fundamentals person, but I'm just looking at the money, right? If you buy a stock, typically you're buying it because of earnings growth, of potential for that company. And there was no argument that Goldman was it. I mean, Goldman is the one you wanted in your corner back in the day, but now something seems to be fundamentally wrong. Will they get back on track? Yes, I'm sure they will at some point. But right now, for whatever reason, they're falling apart. And by the way, they just laid off 6.5% of their workforce. They laid off 3,200 people back in January. So clearly they're trying to cut costs where they can. So not really good. Now this is the first year-over-year decline on earnings for Goldman Sachs going back into 2020 when the pandemic hit. So all in all, a pretty bad picture. So we've got this picture of Goldman Sachs, which, has been, here's the longer term, really back in 2021, it's been just a big chop sideways, even though their earnings are in a rampant decline right now. So what about its competitors? Right? Let's look at maybe some banking firms, let's look at some investment banking firms and see how they're performing, because maybe they all kind of look like that. And I got to say, I think that part of the reason you're seeing Goldman Sachs chart looks like this, even though their earnings are bad, is because you have that, again, a rising rate environment. I think that the rising rate environment is a little more optimism for investment banking firms who might be doing bond trades as well. Patel says, return on equity, debt to equity, projected earnings growth, PE ratio all look bad. And that's kind of why I brought this up, Patel. It's like, this may be a great shorting opportunity here, because for whatever reason, if all those metrics are looking bad, earnings, projected earnings growth, return on equity, debt to equity, if all that stuff looks bad and this thing's still holding, then something's got to give. And here's one of the reasons why I think that it's doing so well. It is in one of the biggest indexes, the most widely watched index in the world. And that index is, I had it up here too. There it is, the Dow Jones Industrial Average. So a lot of people wondering why the Dow was down so much today. Dow was down 1.14%, while the S&P was down 0.2%, and the NASDAQ was actually up. Why? Well, look at Goldman Sachs. Since this is a price-weighted index, Goldman Sachs is the second heaviest weighting in there at about 7%. So this decline of 6.48% in Goldman today, because it weighs over 7% of the Dow, really had an impact on it. And, you see a lot of other names here in the Dow that weren't really down that much. Well, it was predominantly Goldman Sachs that hurt it. And this is important because if you continue to see pain in Goldman Sachs and that price declining, you may see some pretty significant pullbacks in the Dow as well. Now, again, this is all speculative. It's all just an idea that I was looking at with their earnings thinking, there might be some great shorting opportunities. So let's look at competition. What does this chart here look like for some other firms, right? So in your mind, you're going to have to piece these together. I didn't have time to put it all in a really fancy table or anything like that, but clearly you can see that the consensus and the actual results, strong decline for Goldman Sachs. All right, let's go to the next one. Here's Citigroup. Citigroup, looks like it's really just been chopping sideways for a year. It was trending down for 3 quarters. The next numbers expected to be way up, but, chopping slightly down or maybe just beginning of a downtrend here. They missed, by the way, last Friday. They missed by 4 cents. That's why you see the little red dot there. So not looking good. Now, there's one thing before we dive deeper. Can anybody tell me what looks weird about this chart? By the way, the one that on the hard red edge here that has the crosshairs on it, that's next quarter. So that's going to be for Q1, which will come out in April 14th to be precise. What looks wrong here to anybody? And this is why I hate analysts. You look at that chart, it looks like the blue dots have been trending down, but the forecast is for a significant jump in earnings in Q1, which I got to shake my head at and go, everything looks pretty weak right now. Where are you getting this from? You know, where do you think you're going to get a 50% pop, almost a 50% pop in your earnings? That'd be strange to me for Citigroup. So I think these analysts may have overstepped and got a little overzealous here, but it doesn't look as bad as Goldman Sachs. So what about Wells Fargo? The Wells Fargo has been choppy as well, but the forecasts are just insane. They're almost saying 100% jump in earnings forecast for the April 14th earnings. Right? They missed. When did they report? I think they reported last Friday as well. Was that last Friday or? Yeah, I think it's last Friday. So they reported last Friday. They missed by 5 cents. But expectations way higher than reality. So I think what's happening here is the expectations being set way too high for these financial firms. This may present some great shorting opportunities going forward, and we'll have to wait and see how that pans out. But let's go to Bank of America. This is almost the opposite. Well, love them or hate them. Bank of America here actually looking good, right? Going all the way back into Q1 of 2022, you can see that they've been beating. They beat most. They missed Q2 of last year. However, the expectations numbers have been rising, and it looks like every analyst is expecting a monster Q1 for these banks. But at least Bank of America has been trending up with regards to their earnings. What else do I have on here? Oh, yeah. Here's the beauty. This is the big one. JP Morgan. Look at JP Morgan's chart, man. That is beautiful. They are just accelerating their earnings. It looks like every quarter has been expected to be higher, and it has been going all the way back for a year. So JP Morgan, love Jamie Dimon or hate him, whatever they're doing, they've been doing it right, and JP Morgan looking great here on the earnings front. So, I just wanted to show those and kind of run through them all. I know every one of these has a specific, maybe niche market that makes them unique or makes them better in a specific area. Goldman has historically been the investment banking firm. So I guess you got to ask yourself, who is the biggest competitor in that investment banking space? And many feel it's BlackRock. So yeah, the analyst. No, you say the analysts are optimistic. There's optimistic, and then there's high on hopium, right? Expecting earnings to be skyrocketing when the Fed hasn't even pivoted yet. Remember, we still have these rate increases that have been pouring in that still have to hit the bottom line, and that could still hurt these financial firms. So I don't see Q2 these financial firms beating. My assumption will be, maybe we can do that when we get into Q2. That these estimates will decline very quickly once we get towards the end of Q1. All right, so let's real quickly look at some. There's Zacks Research it's an interesting site. I like to go there for my earnings. You guys can all check that one out as well. I thought it would be interesting to see what is Zacks Research, who a lot of people like their research. What do they say about Goldman Sachs? Well, they rate on 3 different categories. They rate companies off of value, they rate them on growth, and they rate them off of momentum. So notice here, this is Goldman Sachs ratings with Zach. On their value, they get an F. And this is just like high school scores, guys. A, B, C, D, and F. So this is an embarrassment, honestly. It really is an embarrassment for Goldman Sachs to be an F in any category. So they're failing in value, right? They're an F for growth, which is really concerning because that's why you would buy a company expecting it to be going up in value and growing over time. And then momentum. So really bad posts here for Goldman Sachs. The VGM off to the right there is just the value, just the average of those, kind of a summary. Now, it still says in its industry rank, it's in the top 17%. It's number 43 out of 251 investment banks. I got to check that out. But if I'm Goldman Sachs' teacher and they're my student, I'm feeling like I failed. This is a horrific rating for Goldman Sachs. So let's look at BlackRock. What does BlackRock look like? Well, not very much better. I mean, you have value, a C, right? So you got a C for value. Growth is a D, which is surprising. I actually thought they'd be a higher in growth. But momentum, you give them an A there. and they're 55 out of 251 in the financial investment management category. So their main competitor looking significantly better, although Zacks has them as a hold. And I have to question this, because if I'm holding a stock that's an F on value, an F on growth, and an F on momentum, then I really have to look at the company, and I got to say, F you, right? I'm not going to take that. I'm not going to buy that one. So I guess the looming question here, as I kind of run through these and pick on Goldman Sachs a little bit, is what do we do with it? So since I brought up some of those other ones, JP Morgan, right? We've been bullish on JP Morgan. This thing's just absolutely been crushing it, looking great. You know, it was $100 just back in October, and now we're at 140. Gotta love a 40% gain in just a few months. But we saw the earnings. That's why. Who got the A? I don't know. I'd have to go back in that category. Let's see. Just because you brought it up, let's go here to that page, and let's go and see if I can find. Here's the top 25. Let's see if it gives me all of them. I don't know. I might have to do a little bit of digging here to find out who is the industry rank list. That's what I'm looking for. Give me the industry rank list. Oh, I'd have to dig around and find out, but I don't know off the top of my head. Maybe next time I'll be more prepared now. You mean so who's getting the A overall, right? Who's the A student? I'm sure that there is one in there. I'll probably look after the show when I have more time to focus on that. But let's go look at some of the other ones we mentioned. And I'm going to scroll back here. I'm going to show you two things at a time. Let's start with Citigroup, right? So here is Citigroup's. Clearly, the hard right edge circle is the expectations for the next quarter. So that doesn't count yet. Clearly, it's been brutal because they've gone from $2.20 worth of earnings on Q2 of last year to Q4. They were at, let's call it, $1.10. So they're down 50% on their earnings in 3 quarters. So their chart should reflect that. Let's go check out the chart of Citigroup. Citigroup really just traversing sideways, right? It just looks like a lot of chop. Okay, fine. You know, I get it. That's not the end of the world. Let's go to our next one here, which was Wells Fargo. Now, Wells Fargo is drifting down, but albeit at a slower pace than we saw with Citigroup. Let's go to WFC. Bring that one up for you. And the chart looks rather similar to what we saw with Citigroup, right? Kind of traversing sideways, looking good for the past few months, just not able to make a new high recently. Let's see if we can get back on track and run up there. But, you know, okay, not the worst looking chart that we've seen. Bank of America is your next one, which looks really good. The expectations from analysts on the consensus EPS has been higher every quarter. They looks like they've been beating, having an uptrend here, if you will, with regard to earnings per share. So what does Bank of America look like? Let's go BAC. It looks almost identical to Wells Fargo and Citigroup. Now, JP Morgan, we just looked at. You go back and you end up looking at something like Goldman Sachs. While it does look similar, it actually looks strong because this is a nice uptrend here. I zoom out here to the bigger picture and I'm like, okay, with that bad of earnings, I'm going to be looking to craft a plan around a short here. And I don't know if others you feel that way. I'm not trying to coerce anybody into a decision, but boy, just looking at those numbers from Goldman Sachs and having a colossal miss this quarter, it just feels like Goldman's going to be dragging this down a little bit. Now, if they do continue to underperform and have issues, remember that Dow Jones Industrial Average is going to start to tank even more. So that could be a catalyst for some sell-off here. We can look at the Dow. Here's your Dow futures today. All in all, not that big of a deal. It's 1 point data with the Goldman Sachs day today, but still, the reason you have that red candle and other markets like the Nasdaq are up is because the Nasdaq does not have Bank of America or Goldman Sachs in it. So that's my take on it. I'm not going to say Goldman Sachs is dead. I think Goldman Sachs is just ill. They're sick right now, and the question is, how long will it take for them to get out of it? At a price tag that we see on Goldman Sachs, which is fairly lofty at about $350, I think there's a lot of potential downside room here. So that's my take on it. I'm not going to map out all the entry, stop loss, price target stuff for it yet, but I will wait for it to get below 340. Once it gets below 340, I will probably start building a short position. Where do you think it's headed? Does it end up going to 310? Do you play the conservative way and sell puts on Goldman Sachs to collect premium? I don't know. I don't think so. I think I would go directionally here and buy, at least 90 days out, maybe 120 days out on the puts. I'm going to be with Goldman Sachs. Otherwise, you tie up a ton of capital by just buying or shorting outright on Goldman Sachs. And there you go. How long did I do that? 26 minutes. Not too bad. Not too bad. So I know the sensationalism of saying rest in peace, Goldman Sachs. They're not going anywhere. They'll reinvent themselves and turn into a world-class company yet again, as they always do. So let me go and show you here. I actually thought I had it all set up, but apparently I did not have it set up for you guys. So let me go and see if I can find this one. So here's what we had for today, earnings and economic calendar. Your economic calendar was interesting. There wasn't a lot of stuff that happened for the U.S. The only one that really mattered here was this Empire State Manufacturing Index. And if we look at that chart, which I will bring up for you guys right now, I kind of had this feeling like things were getting better and the economy was getting better. I saw retail sales numbers looking slightly better. We have a huge inflation number coming out this week. Why wait for 340 if you know it's going down? I don't know that it's going down, right? I don't know that it's going down. Granted, it has been missing every quarter for the past 5 quarters, and it's still staying the same, if not moving up. So it's doing the exact opposite of what I think it should be doing. So I certainly don't know, Naum, where this thing is going to go or what it's going to do. But based off of the economic data, I guess I have to ask myself, what do I think is going to end up being stronger? Is the technical chart that's moving up right now going to be the strong determining piece? Or is it going to be the overwhelming pressure on earnings and people that are looking to get growth out of their underlier and not getting it from Goldman Sachs? They might move away from that. So the reason I'm going to wait is because it hasn't been able to get below for the past since November. So I'm okay to leave money on the table. It's only another $10 away from here. And if it gets down below, okay, fine. Then I'll have confirmation. I like to wait for confirmation because in the current phase that it's in, it could have a ripping day up tomorrow. Why? Because today was a big oversold day and a lot of people will buy those dips. So I need to let the price confirm to me that it's going to go in the direction I think it's going to go. And what you're going to say, Noam, and you're totally right, is, Merlin, you're going to leave money on the table. You could have made an extra $10 per share. Don't care. I don't care. If I make, a few bucks per share, or it depends on my position size, I'm happy with that. But I'd rather let the market or that security tell me, hey, I am in fact going down because I did break this demand zone, this line in the sand that's been there for a couple of months. So that's why it's important to me. Ganesh says, I believe the retail sales will miss tomorrow. I'm short on some retail stocks. What's your take? I'm not 100% sure on that one. The expectations are that retail sales are going to be really bad tomorrow. And it kind of surprised me. And I'll show you the numbers here. Let's go out to this one. It kind of surprised me because if you look at the 2 times a year when you usually get really good retail sales, it's usually because of Black Friday and the holiday shopping season. Well, let's go retail sales. Bring that up for you guys so you can see the chart. And I'll zoom in here, make this bigger for y'all. Let's just zoom in, get past the pandemic garbage. So the previous one was expected to be negative 0.2. We came out at negative 0.6. Let me make sure that's right. Yeah, we came out at negative 0.6. Now they're saying negative 0.8 on retail sales. And it's weird having a negative 0.6 when that was for the month of November. So we should have seen actually a nice number for November. Well, we didn't. If you look back here in 2021, November was a great number, nice and positive. Well, not this year. I actually don't think that we're going to miss on retail sales, although I'm not really playing it. As you can see right here, it says they're expecting it to be negative 0.8 versus negative 0.6. So they're further expecting a slowdown in retail sales. But from all the data, it sounds like there was a ton of buying going on in the holidays. So I don't know. I'm not playing it per se. I still have some long positions here, which I may end up closing this week. But yeah, I'm not really playing anything retail sales. I think it's a gamble. It's a crapshoot at this point. If Sam Bankman-Fried could still benefit from the sale of FTX tokens, his forecast would look good. Oh, yeah. Well, Sam Bankman-Fried, that boy, I just want to see what ends up happening with the whole trial thing. I want it to be over with and done so I can watch the movie and just sit back with a bowl of popcorn and enjoy that one. So I was talking about the economic announcements. Notice here that Empire State Manufacturing Index, right? When you have a number that's above 0, that's a sign of optimism, of economic growth, of manufacturing optimism. Well, it did an about face. Now, it was still negative, right? It was a negative 11.2. They thought it was going to just get better and get to negative 0.87. Well, number came out at negative 32.9, which means that in the New York area, they're not feeling very optimistic at all about manufacturing in the New York area. So that is actually a really bad piece. It's not as important, I would say, as a retail sales number or GDP, but it is interesting to see what local regional areas of the United States are feeling the pinch maybe of the economy and what's going on right now. So that was a bad piece. Here is your next part, which is the earnings we just talked about. Morgan Stanley, they beat earnings and had a nice move up of about 6%, whereas Goldman Sachs missed badly and was down about 6%. Now, both of them, as I mentioned, we're talking about higher net interest income. Again, lending is really helping out their businesses and the extra margin they're making on their loans. One of the big things with Goldman Sachs was that they increased the number for credit losses from 183%. So they're $972 million is what they put into Q4 for credit losses. Now, here's where it gets interesting. In 2021, let's do this. In 2021, for the whole year, annual year, Goldman Sachs set aside $357 million for credit losses. How much do you think, and type it in the chat, now we got a bunch of people here. How much do you think that Goldman Sachs allocated this year in 2022 for credit losses? Mind you, in all of 2021, it was $357 million. What do you think? Did they increase that credit loss provision or they decrease that credit loss position? All right, give me a number. What do you think? In 2021, they had $357 million of credit loss provision, basically just defaulting and bad debt. What do you guys think? While I'm waiting for you to type it in, because I know I got a delay here, I will tell you what the number is. They have increased it. And this year, not this year, but in 2022, it's $2.7 billion. Like, whoa. So there's something, they either underwrote some seriously bad loans or just did not look at people's credit or something, but $2.7 billion is what they allocated for credit losses when it was $357 million. That is a massive increase. Zed, $6 billion. Maybe next year, and I think this is part of the reason why you're seeing Goldman Sachs being dragged down so much, but honestly, I think the price should reflect that, and I really am just shocked that Goldman Sachs hasn't sold off even more. Okay, let me go into the economic calendar and announcements for tomorrow. Earnings-wise, did I have anything interesting for earnings? I think I did. 1 second, let me just check here. As sometimes I forget to go there, and we'll put this on. There we go. Excelente. Huh, that's weird. It's not showing you. Okay, well, hopefully this will show up here on your screen. Okay, perfect. I got it now. I made a little bit of mistake. So here's your economic calendar for tomorrow. Let's start there because tomorrow is a huge day, right? A big one. For the U.S., you have PPI numbers, which of course, they're expecting those to contract even more. Now, from an inflationary perspective, you want to see that negative, and it says right here, let me grab my pen, which will probably advance the slides because it always does. It always does that. Right here, PPI negative 0.1, right? We were showing 0.3% growth month over month, meaning inflation is still rising. This means that for the month, not that it's done, but for the month, we have seen inflation subside to the tune of 0.1%. That's very positive. And remember, you have a four-letter word coming up that starts with F. FOMC. That's 2-1. We get that FOMC meeting. And again, more contraction in these inflation data could have a big impact on their decision. Now, again, I still think we're going to get 25 basis points. I don't think there'll be any change from that, at least at this meeting. But if inflation continues to drop as it is, we may see at the next meeting that they decide, we're going to halt here. I know everyone's saying it's 25, 25, 25. I think that they may actually halt if the inflation numbers really do drop significantly. Right now, the expectations are 16% that they don't raise in March, so the March meeting, and then it's a 78.9% chance that we get another 25 basis point increase in March. Okay, and otherwise you have the retail sales number that we just talked about, and that's pretty much it. From the earnings front, you do have some big names: Kinder Morgan, Alcoa, Charles Schwab, PNC Financial Group, Discover Financial Services, JB Hunt Transportation, and Prologis. So we have a few different financial firms reporting earnings tomorrow. Kind of threw me for a loop with Goldman Sachs. I thought Goldman Sachs would do well, as almost every financial firm has. It's kind of why I've been holding these positions. I kind of think you'll see more of that go through here on earnings, and maybe you'll get Schwab and PNC and Discover beat on earnings as well. All right, let me see. Questions. Ganesh says, if all financial institutions are provisioning for higher credit losses, aren't they preparing for a bigger recession? Yes, they're putting a bigger buffer for that, and rightfully so, right? If you get the feeling a lot of people are going to be defaulting, it's just I'm not on that side of the business, right? I don't see the financial statements for Goldman saying, here's exactly how much bad debt we have and here's where that bad debt is written. But yeah, if you provision $900 million for one quarter, just Q4 alone is what they allocated, but $2.7 billion for the year, that tells me that they're really forecasting some pretty heavy drawdowns. Now, here's the kicker. I think you'd all agree. If Goldman Sachs sets aside $2.7 billion for credit losses, and maybe those losses don't get incurred, then all of a sudden Goldman Sachs could come out of this smelling like roses. So the chart looks like okay. The financials and fundamentals look like crap right now. I have a feeling that it's time for a correction in Goldman Sachs into an area that you might want to be a buyer for the long term, because Goldman Sachs is, of course, Goldman Sachs. Let me see. Is that connected to bad car loans? That would make sense to me. It could be bad car loans. And again, it's sometimes not even bad car loans. It's just people defaulting because I think you guys might remember a couple years ago when my girlfriend came to California, she bought a Toyota 4Runner and way over sticker price, right? So now I think what might be happening, and I'd like to have some expert on that can maybe fill this in for me, but a lot of people might be going, you know what? I'll default on that car loan because I paid $10,000 over sticker, and I'll buy another one below market value today. I don't know. I think that might be part of it, but I'd have to have somebody who's an expert in that because I got too many other things to focus on to know all that. I think you're right, those office business losses. Don't know. I'm pretty sure they do, Dave. I'm pretty sure they do. I'm not a CPA and any of that stuff, but I'm pretty sure they have creative accounting, we'll call it, right? JB says, if Goldman Sachs does use their bad debt reserves, can they roll it over from year to year? I believe so. I believe so. When banks set aside money, yep, there may be, Michael, but I'm not sure. I don't know if they have to follow a specific formula or not. If they don't end up, I do believe that they can roll it into the future. Yeah, it doesn't get lost, right? Could they possibly over-provision? Yes, that's kind of what I was thinking. I'm thinking that they may actually be over-provisioning. It's usually all consumer loans, assuming there will be people getting laid off and cannot pay their bills. Right. And if you look at the layoffs that are happening more and more, even within Goldman Sachs, laying off, what did they say, 3,200 people? 3,200 people at Goldman Sachs got laid off, but so many other firms are laying off as well. So it just, I think it's smart to be prepared. And if it happens, then Goldman Sachs will be okay. If it doesn't happen, then they'll be even better because they'll have all this extra that they could put back on their books. So, what does it mean when someone defaults on a loan? Basically, it means that they don't pay their bills anymore, right? So let's say you have you bought yourself a car, got that new Toyota 4Runner you've always wanted, but you paid way over asking price because of the tech issues and chip shortage, and you just go, you know what? Look, I could buy a brand new one for $10,000 less than I'm paying. I'm gonna just not pay. After a certain period of time, it will go into a default, meaning you're not making your payments. They'll go out and do collections on you and send people after you, try to get your money or get their money. And ultimately, it'll end up really hurting your credit very, very badly. But default is where you stop paying on your debt. Yep. All right. Well, I think I'm going to wrap up. I think I'm done. Tomorrow I have tomorrow's what? Tomorrow's Wednesday? Yes, tomorrow's Wednesday. Thursday, I'm going to have Scott McCormick on the program, so I have no guests for tomorrow. If there's something that you guys want me to talk about, let me know. This was basically off the top of my head just because I saw the numbers that came out this morning, and I just sat and looked at financials for a little while, which I kind of enjoy doing that. But if there's something you guys want to cover for tomorrow's show, let me know. You can email me at TraderMerlin@gmail.com or put them down below. Any comments on the YouTube page, any video is fine. I'm always happy to check those ones out. I had some notes here. Did I get to everything I need to get to today? Yes, I did. All right, well, I'm going to only do a 40-minute show. Yeah, Adam, people are willing to do that, but you got to be careful because sometimes, actually every time, it's going to hurt you significantly on your credit report, and that could stay with you a long time. Nope, I didn't buy more Tesla. I'm just leaving my current contracts open. They're most likely will expire worthless. We saw Tesla had a pretty nice move today, so I think I'm safe for Friday. As you guys know, I've got some 120s I sold, and I have some 100s as well. The 100s I'm feel really safe about that. And then the 120s, feel pretty good about that today too. Is up 7.43%. As far as the small account, yeah, I did start an account today. Let's see. I started up an account on E-Trade that is the $150 a week. There you go. Cheap deflated options source. I don't know. I had to look at the options chain. Lots of that early, Teach. That's right. Well, I just got so much to do. I mean, I have so much to do. I'm going to be doing a lot less work for OTA and a lot more for myself. So yeah, my time has become very precious. So I'm going to be doing a bit more for myself. Again, finishing those damn books that I got to work on, and hopefully have something out here soon. So, all right, everybody, that's going to do it for me. We will see you on the 18th to talk about retail sales, CPI or PPI number. It could be a wild one tomorrow based off what that number is. If it's in line with what's been happening, it will probably come out in line with expectations, which would show a negative 0.1 or somewhere in that ballpark. And markets will probably be happy with that because it means the Fed is going to back away. So even though we're at supply on a lot of these indexes, if we get a good PPI number, I expect to break through that overhead supply and move forward. If it comes out higher than expected, well, then we'll probably see markets sell off from those overhead supply levels as we thought they might. Thanks, everybody. Have a fantastic remainder of your day. Email or message me at TraderMerlin@gmail.com or on the YouTube page. I will see you all tomorrow. Take care.